Hello YouTube, welcome back to January's episode of my portfolio, Affordable Investing. In this episode we're going to review my dividends I've got for this month and the two new companies that I've purchased into. But before we get into that, I'm going to waffle on a little bit about affordable investing and what it means, while you can just take a look at how my portfolio is doing. So what is affordable investing to me? So affordable investing to me is being able to use my spare income to invest in the stock market to generate future wealth. In a nutshell, and quite often people say that they can't afford to do it, but you can. If you want to do it, you can. So one of the things I always suggest to the people that say they can't afford it is to look at their income, what they've got coming in versus what they're going out, and write it down on a bit of paper, or or anything. Write it down and then look at that list and think, what do you really need to pay for? So things like your mortgage, your food, your bills, rent, all the stuff you need to eat, they're essential, so they're tick. But then there's things that you don't need. So for instance, smoking, drinking, Netflix, things like this, small things. And it doesn't have to be a lot. You just need to make yourself £5 a week, £10 a week, £25 a week. £25 a week give you £100 a month. And that is more than enough to start investing. You can start investing at just £5 a month and create a portfolio. Not as large as this portfolio, and I wouldn't recommend this if you want to get invested in. You'd want a portfolio around between 5 and I'd say 15 companies. You don't want to go too big. You want to be able to manage it. You want to be diverse, and you want to be able to see it grow. I've got a large number of companies in this portfolio to show you the returns I'm getting from a lot of companies with small amounts invested. So that makes it more realistic to what people who are getting into investing might see. But that's my aim. That's my aim in this. So one of the things, how can you get a bit of money together? So I was talking to a guy a few months back about investing, and he said he just didn't have the spare cash, couldn't afford it. He said this to me while he's eating a £5 meal deal, drinking a can of Red Bull, and smoking. And so I asked him, I said, your lunch you're eating there, I said, how much that cost you? And he told me it's £5. It was a meal deal. Blah blah blah. I said, well, how much is that can of Red Bull? And he told me it was like £1 something. So I said, so you spent £6 there on your lunch today. And I said, do you what do you do? He goes, I was asking him, do you do that every day? And he goes, at least 4 days a week, 4 or 5 days a week. Yeah, I do. So I said, so if you made yourself sandwiches, for example, and didn't spend that much on your lunch, you'd have £25 a week. You'd save £25 a week. And then you could do £100 a month investing. You could do it if you want to do it. You just find excuses that you don't want to do it, which is fair enough. It's your choice, it's the way you want to live your life. But if you want to be able to afford the things, look at what you spend your money on, and what's a necessity and what is luxury, shall we say? I don't know how to say it really. Wasteful. Because the other thing you need to look at as well. So, for example, certain times of the year, you'll have more money than others. So for me, in February and March, I don't pay any council tax. I pay one over 10 months. So therefore, I have £200 or just under £200 spare each of those months, and that half of that money will go into investing. So that's how that's how I do it. So I can afford £125 a month at the moment, which is my minimum investment. But if I don't spend, if I've got more spare money, or if I've worked a bit of overtime, for example, then I will put a bit more in. And so next month I'll probably put some of my council tax money in there, probably put £100 of that in there, for example, and do it that way. So that's how I afford to invest. I cut out what I didn't need. So, for example, I give up. So I gave up smoking a few months back. That's helped. That's actually given me quite a lot of spare income, more money than I thought. I didn't realise how much I spent on cigarettes. I didn't quit smoking for the money. I quit smoking for other reasons, but it has come in handy. Anyway, so we're about halfway through the list now. So this month has been exciting. Should we say that? exciting to say the least. The highs and lows of the month. For the highs, I think I was about 12% up. Very excited. And at my lows, I was 6% up still. So lost half my profit. It was amazing. It was a roller coaster ride. Normally I invest in the first day of the month, but because it was January and the New Year, etc., and I was still getting sorted out, I think I invested sort of around the 10th, I think, which was at a high. And then a few weeks later, or a week later, it went down. So I missed it. But I never try and time the markets. You always time the markets at the best conditions. It's never the right time, and you'll miss out. You'll always miss it. So this month, what did I put in? So we go. I'm nearly at the bottom of the list now. I think I invested about £280 this month. That was made up from my minimum investment, £125, plus had some dividends from another portfolio that I've put into here for just to boost it up because I want to get £3,000 in. So I need to start bumping up while I can afford it at the moment. So I think my next dividends for that is going to pay out March and April. I think I've got some more dividends from another portfolio I want to put in here. Okay, so where are we at? So the companies have been for them. Hope you got a good look this month. Yeah, so at a high here, 11.8%, and at my lowest point, somewhere here, 6%. So as you can see, up and down, and it's been very sort of volatile this month, exciting as I like to call it, and then it's sort of starting to settle down. So overall, I finished the month with a portfolio value of £3,430, which is not bad. And I got quite a bit of dividends this month, so that's good. So the two companies I've added are Unilever. So the reasons I've added Unilever, they're consumer goods, so they're quite stable in times of economic turmoil. So the threat of interest rates rising, inflation rising, that will have an effect on the stock market, which I think I've already seen some of that already this month. So consumer goods sector is quite stable. People buy stuff all the time. So Unilever, I've already got one. Johnson & Johnson, for example, and the other one I've got is Procter & Gamble somewhere. Procter & Gamble is another one. So I've added Unilever to my portfolio. I want to find it. There we go. I bought those into those. They trade currently at £37.83 a share, which is quite expensive. I've got £3.23 invested in them at the moment. And they have a dividend yield of 3.9%, which is quite good. So some of the brands you might recognise from Unilever, and it's another reason why I buy it, because I buy these brands every week, but Domestos is one of their brands, Sift is another one of their brands. Ben & Jerry's, I buy that every week. I have a tub every week. Walls, my daughter likes Walls ice cream, and my partner, she likes Magnum's ice cream. That's another one, and Comfort is a go-to detergent. So they're the brands for Unilever. And the other company I've bought into is the one just above it, the Renewable Infrastructure Group. So these invest in or purchase solar farms and wind turbine farms, and they invest in it. So they've got quite a large portfolio. They've got 80 projects on the go at the moment, over 2 billion, which is quite a lot of money. So it's really good. So I didn't buy it because of what they do. I buy it because I quite like my renewables, and I've got my own solar panels on the roof. I think they do really well. But it's one of the things I'm going to be moving into this year is utilities. So I'm going to be, my main bulk of companies that I'll add to this will be utilities, I think, and a couple of others. But yeah, so a bit speculative this one. I like the dividend yield on it. It's not doesn't feel like a dividend trap. It's a reasonable amount of dividend. It seems quite a good company from what I've looked into. So I'm quite liking it. So that's all said and done. Let's go on to my returns this month. See if we can do it sort of side by side. So first dividend I got from AGN was 29 pence. That's a monthly dividend payer. Always does, or it did quite well for me last year, and I think it's going to be the same this year. It feels quite good. The next one I got was automated data process. I got 20 pence from those. Okay, that's a quarterly dividend payer. It's steady. It's okay. It's not really setting the world on fire yet. The next one I've got was the Bank of Nova Scotia. I hope I pronounced that right. That's a quarterly dividend payer. 51 pence. That's quite good. That's been quite a good one of mine. Quite enjoy that one. I quite like it. Next one, Cardinal Health. Got 36 pence from that. Chuba, got 20 pence from that. Eco Labs, got 8 pence from that. Not a great dividend payer. Not like it's a growth company and they grow the dividends, but right now it's just it's on the low performing side. Franklin Resources, they 8 pence. Quite enjoying that. Gladstone Land, that is a new one. I had it late last year, and so that's only paid me pence, so I'm not worried about that yet. That's not really reflective of what I think it is, so I'm going to keep hold of that one a little while. GlaxoSmithKline, that's another one I added late last year. 3 pence from that. That's doing okay. Illinois Toolworks, that's a growth dividend company. 22 pence. Reasonably happy with that one. My first of my ETFs, that paid me 14 pence. That did okay. That's the FTSE 100 iShares core. And my other ETF is the iShares JP Morgan bonds. That got me 32 pence. That's okay. Kimberly Clark, another nice little quarterly dividend payer there at 31 pence. LTC Properties, that's a monthly dividend payer at 20 pence. Quite happy with that. That growth seems to grow month on month. Well, obviously I increase my holdings in them, but they seem to grow quite nicely. Main Street Capital, that's a new REIT monthly payer that I've added, so 2 pence. I'm quite happy with that. I think that's going to be a strong one this year. I think that's going to be my favourite this year. Well, I'm hoping it's going to be my favourite this year for strong growth. Metatronics. That's what I think to that one. 18 pence, say, still not bad. National Grid, utilities, 5 pence. Quite very happy with that. I'm going to grow that one. Pepsi Cola, another commodities, consumer commodities or consumables, whichever you want to say it. 0.27 pence, so that's not bad. Another ETF there, and that's my US bonds at 14 pence. That pays monthly, so quite a lot of those. My monthly ones do quite well actually. I quite do better than I expected. Prospect Capital, that's the monthly one. 31 pence. That does really well. Reality Income at 15 pence. That is a very famous. Their motto is the monthly dividend payer. So quite a lot of people invest in that, but it's not been my best monthly, but I still like it. So I got 15 pence from that. Roper Technologies does okay. That's a growth company, growth dividend. So the dividend is not great at the moment, but I do like it. So I'm going to hold that one quite a while. Sure, Communications Class B. I think that did pay me monthly. I think it still pays monthly. That does okay. It's steady. Stag Industries. This did really well for me last year. Really well. So I'm hoping it'll be the same this year, but got 13 pence from that. Then we're into my Vanguard Etfs. So my S&P 500. Nice steady one that at 19 pence. My FMXYCzyN Properties is another REIT. That paid me 6 pence. That's fairly new though. I'm not sure I'm going to hold that one too long. That might disappear from the portfolio. I'm not liking it. at the moment. And then we've got Walmart at 14 pence, and Whitestone, which is another REIT, I think, but that's a monthly. I think it's a monthly payer as well at 2 pence, and that was added quite late to last year. So overall for the month, we've got £5.08. Yay! Which I think is a reasonable return for the month. So I probably want what I want from the year. I think I want an average dividend of around £8 a month, maybe. £8 a month seems reasonable. Yeah, so hopefully at the end of the year, we'll have £8 a month average dividend return. So £5 is a good start. And on to my first chart. So this is my performance table chart. Let's see if I can make that. It's a bit big. I'm not sure how to shrink it on Google Sheets. Sure there's a way of doing Zoom. Let's find out. So this is a performance table. All these are all the holdings that I own, and this chart represents their dividend payment. So Penning Group has been my biggest lead. Paid me just under £10 since I've held them. They had to give me a special dividend last year, around £9. That's why they're quite high. And second place is BP, about £5. I like my oil companies. I've held oil companies for a long time. It was one of my dad's favourite, that actually. And then in third place is another oil company, Royal Dutch Shell. That's about £3.50. Doing all right. So again, so that's my top three. Prospect Capital, as I said last year, one of my best ones, just over £2 there. And then which one's going to go last? We'll go for AGNC Investments at just under £2. So that's my top five. To do 5, 1, 2, 3, 4, 5. Yeah. This chart will track how much dividends I get per month. So at the moment, only 1 month, so we're at £5.08. Doing well. So as a comparison, I've done this. So here, if I was to invest my money in an ISA, now I've used Barclays because I bank with Barclays. I've picked their best interest paying ISA as a comparison to what I'm doing. Okay, and their annual rate of interest is 0.2%. Disgusting. And even though it says on their website they pay the interest annually, I've calculated monthly to try and sort of keep it as a comparison, like comparison, so the compounding is the same. So, and I've added the same figures, so the balance will be the amount of money I've invested, including dividends, and this also includes the interest. So it's like for like. So as of this month, so we're in year 2, I would have got 52 pence in interest on my money if I'd had it in an ISA, versus the £5. I'm going to use that as a comparison as the dividends, not the capital growth, as the dividends at the moment at £5. So I am 10 times getting 10 times more rate of return on my money than I would do if I had it in an ISA just for dividends returns alone. So we'll run over the big bits. So yeah, deposited £285, so not bad. That might match that balance there, so 3,089, and that's with that's what it would have been. Yeah, that's about right. Yeah. So with dividends, smashed in 290. Total money invested is 3,145. So again, comparing that to my balance here, what, £50 up. Quick maths. My investment value is that. We've been over that already. I'm down on the year. So down on the year, I'm down 11.5% down. Now, at the beginning of the month, I was about 11.5% up. But I'm interested, this is something you should track. So overall, so looking at my portfolio, I am actually still up 9%. Okay. But this year I'm down 11% on the £285 I've invested. That's the key for that. So it's the money I've invested. And that's before dividends. With dividends, I'm still down 11.3%. My return on investment for dividends this year is 1.78, which is not bad. My yield's running at 1.8. I want to get that as an end of year target. I want that to be, so if I added up all the companies, the dividends that I get, and divide that by the companies without investing any money in, my dividend yield should be around 4%. But because I invest every month, this never actually reaches 4%. So it's because it's done on a ratio. So by the end of the year, though, I do want to see that at over 2.5%. And I think that's where it should be at. Total amount of dividends I've had since doing this is £56, which is good. Average dividends this month, so that's the amount of dividends I've had divided by 12. So I'm averaging 42 pence a month, which is not great. And like I said earlier, I want to get that to about an average of £8. So my capital growth this year is down £32.77, which is not great because it's a negative, but I'm doing okay. And overall, I'm up £285. And my average money I'm deposited, so that's target is 250. I'm averaging £23.75. That's my first month. So come the end of the year, that wants to be 250 thereabouts. All right, going on to my predictor. So can I get 50k in 5 years? So let's have a look. At the moment, it's not looking good. I'm going to be 20k short. But those who watched the overview video, I've now adjusted year 2 for my actual figures. And over here, I'll put in what I projected I'd get. So I'm going to be short at the moment, and I've still got a whole year. So if I get 3,000 invested and nothing else changes, I won't be far off my predicted fund. I'll be a long way off my capital growth, but I'm hoping my dividends, I'm hoping to beat that. I want that to be 110 plus, I think. So all in all, let's keep tracking that, see where it goes. So if you're liking this type of stuff, or you've got any suggestions, ideas how to improve these, or what you want to see, leave them in the comments below. If you want to see some absolute beastie dividend unboxing, and I like the way the guy does it, you should check out the Compound Investor. His way he does his monthly dividend reveals is good. I like it. It's good, and they're always mega. Guy must be a millionaire. Hopefully, well, if things go well, we could all be millionaires soon. Anyway, thanks for watching. Leave a like and subscribe, please. Cheers.